What's up, guys? It's May 15th, 2025. Looks like we got a trading range day, a rally, and then a bigger trading range. We're in a pretty interesting spot. On the daily chart, I drew this line just to see the swing and the breakout by the bulls. Bulls are getting continuation, but now we're in that third leg. We're in that third leg from a fractal perspective. So what I mean by that is there's a trend line break here, trend line break here. Leg 1, pull back leg 2, pull back leg 3. I want to give a quick shout out to all the members and subscribers. You guys keep showing up. We're asking me good questions. I appreciate you guys. Today in the Discord, we did like a 45-minute stream. It was cool talking to you guys. I was talking about this trading range, and I talked about a market cycle reset. That's going to be the focus of today's video. It's the market cycle reset because a few of the people want to know more about it. I said if we break out right around here, it could be a market cycle reset. And look what happened. There was a breakout, pullback, shallow. So bar 20 is that first pullback, first reversals fail, and another 4 bars. These 4 bars are strong to get its own second leg, 26 and 27, making it 3 bars up. So yeah, that's what we're going to talk about. Leg counting and market cycle. That's what I focus on when I day trade, and I trade with limit orders. I trade with limit orders because I like to trade pullbacks and catch second legs. So if I see a strong leg here, for instance, I saw 8 and 9 as a strong bear leg. I actually traded NASDAQ, so it looked a little different, but I saw 8 and 9 as a strong bear leg. I put an order right below 8. I got filled on 10, sat through the pullback, and I caught the leg 1 pullback, leg 2. I scalped out right around the low here. So that's how I trade. I do the same thing every day. I like to trade from a systematic perspective, and I trade breakouts and second legs. So if that interests you, hit the follow button. I studied Al Brooks, and I took Quant Systems by Ali Morning. I'm sorry, we have a lot of new members, so that's the angle I'm looking at these things from. It's price action. I look at orders and trap traders for good breakouts. Anyways, so daily chart. That's where we are on the daily chart. Leg 1, pull back leg 2, pull back leg 3. Overnight sessions are kind of selling off. I'm looking at it on the right of my screen. I do have a trade open. So this is the overnight session, kind of selling off, but not that good. I'm looking for leg 2 of this bar right here. So I'm almost filled. Leg 1, pull back leg 2. Problem is 207 already sold off. Now I'm back. If I get filled, it'll be in the third leg, which it's okay, but it's not what I would prefer. I would have preferred to get my TP filled on 207, leg 1, pull back leg 2. Second legs work because there's 3 types of traders looking at them. So here's an example of a second leg. Leg 1, pull back leg 2. The 3 types of traders are bulls that are going to buy this bar, hoping for the breakout, and they get it follow through. So they're in profits. The second type of traders are going to be limit order bears, shorting here, shorting at resistance levels. And we know they're short there because there's gaps. Gaps show us trap traders. If you want to know more about gaps, check out the gaps video. Gaps show us trap traders, so bears are going to be forced to buy back their position. When bears are buying back their position, bulls are going to be the bulls who are bought the market early are going to buy the market, and then the second set of traders are us, the traders who want to enter the markets, and we're looking for a pullback. So that means early bulls are buying, trap bears are buying, and traders who are looking for a second leg are buying. When that dynamic is present, there's a good chance for a second leg, and that's why I trade second legs. So if you're watching these breakdowns, just know I'm looking at leg count, and I filter it out through market cycle. So we have a gap down, but bar 1's a good bull bar. Bad for the bears. Bears want to see continuation. Bar 2 is a bear bar, and bar 3 has a tail. So this bar 2 had enough momentum, but then it rallied. We're above the higher time frame EMA, so we're in a bull regime. Leg 1, pull back. Leg 2, pull back. Leg 3. Bar 4 is a big bear bar closing on its low, but it has a bad close. The range is right around here, and bar 1, bar 2 is right here, so there is a close below that range, but there's a tail. So bears are either taking profits, and bulls are trying to buy range lows. Trap bulls up here. We know there's bulls that bought these candles because there's tails on it. So there's trap bulls. They're going to buy more lower and get out at break even on their first target and make money on their second. Bar 5. Bull bar closing on its high. follow through 6, and then we get another bull bar closing on its high, bar 7. 3 bar bull microchannel. I do like this setup, but the context is tough because bar 7 is climactic, and then we see bar 8 selling off, closing on its low. Bar 8 is an inside bar, so if you're long, I think it's acceptable to get out, wait for a pullback, wait for more information. 1 second, I'm just going to hit out of this trade. It's breaking up above the EMA. Okay. Yeah, I just took a $30 loss, but that's okay. I trade a system. I'll just wait for the next trade and be good to go. And that's what I hope. That would be my end goal for everyone here, is for you guys to understand the market cycle and pick a part of the market cycle and learn to trade that through a systematic way. Because trading a system is the fastest way to profits and the fastest way to discretionary trading. My goal is to be a discretionary trader over the years. Bar 8, bear bar closing on its low. Bar 9 sells off and then rallies. So it's not the best close. But the bears that shorted bar 8 made profits very quickly. You could say the spike starts at the high of bar 7. But I took the bar 8 measurement. Bar 10. So bar 9 sells off and then rallies, closes bullish, not good for the bears. Bar 10 sells off, rallies. It's a trading range bar. It doesn't bother me, it doesn't make me mad. It's just, it is what it is. Bulls are trying to buy, looking for a rally. Bears are looking at this as a pullback. Bears have now tried twice to sell off. Bar 11 goes above the EMA, but it sells off, rallies, goes above the EMA, and sells off again. So there's bulls and bears in bar 11. It's a trading range bar. And we have a good bear bar closing, bar 12. Bar 13 is follow through, but again, we're closing on top of the EMA. And we're closing not far beyond bar 5. So if you're looking for a breakout, what are we breaking out of? 13 is breaking out of 12. 12 is breaking out of 11. That's it. And the bigger context is we're not breaking out of anything. We actually just sold right off into support. On the 10-minute time frame, this is just one bar testing support. And then look at the rally. So there could be 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. That's a wedge bottom into support. Look at the last time we had a wedge bottom. Leg 1, pull back, leg 2, pull back, leg 3. Wedge bottom into support, it rallies. Could say the start of the bear leg was from the high of 7. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. The hidden leg on 14. What I'm getting at is there's many legs lower for the bears. So if you're short, just think about what's going on in the context. You're short at the lower trading range. There's nothing wrong with buying back. You're short for small profits or small loss, waiting for a better setup. Bar 15 rallies, but then sells off. So we know there's more sellers around bar 12. Bar 16, it has a tail, so it rallied and sold off. And this does look like it could be bearish. Right around here. But how many legs has the bears already had? You know, there's hidden legs on 9 and 10 and 11. So bears have been trying multiple times. They tried here, they tried here. Yes, there's a trading range. We're at bar 49. We're right around the bar 49 low. So if it's a trading range, buy low, sell high. So you're short right at the low of yesterday. Bears tried a couple times, but it didn't work. Bar 17. Bull bar closing on its high, but not trapping any bears. And then we see 18, another bull bar closing on its high. And then with the follow through on 19, now we have a bear trap. How do I know that? Because there's a gap there. Bears are now trapped, and gaps happen right around support and resistance. And look at bar 12. There's resistance right here. It turns support. It turns support because there's sell orders here, and it broke out. So when the market comes back, bears are going to buy back shorts. And when bears buy back shorts, well, that turns resistance. That's how resistance gets flipped into support. Bulls are going to buy the pullback on 19, and then it rallies, trapping bears again. This is where I was talking about, right around here, I was talking about a market cycle reset. The reason I was talking about that is because we're in a trading range, so that's the overall price action. And then we've had 3 legs up. So there's many ways to count. I'm just going to look from 14 to 17. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. This is its own little trading range amongst the big trading range. And when we break out of a trading range with enough momentum, if the momentum works, that's a market cycle reset. And 18 and 19 show us that, in a 21, 22. So why is 5, 6, 7 not a market cycle reset? Well, look at the fault. We don't actually know until the next few bars. Let's say bar 7 was a bull bar closing on its high, then you would say this leg was the reset. And then if it gets followed through, that's the reset. However, it didn't. It just ended up vacuuming to the high of the range, bar 7 became climactic and then sold off. So that's not the reset. Why is 12 and 13 not a reset? What is it breaking out of? 12 is breaking out 13. So there is a trading range. Bear with me here, guys. There's a trading range here because there is a reset going on, but it's on a smaller time frame. See, trading range breaks out, and then we have a leg 1, pullback, leg 2, pullback, leg 3. What happens in leg 3 is the market tends to reverse, and the market reversed leg 1, pullback, leg 2, pullback, leg 3, and then this breaks out, resetting the entire market cycle. So here we have a visible market cycle reset. A visible market reset just means the chart we're looking at, we can see it, 17, 18, 19. But 12 is breaking out of 11. The leg 1 is bar 12, pullback to leg 2 is 13, pullback to leg 3 is 14, trading range behavior, and then it rallies then the high of 11 becomes a trading range, and we break out 18, 19. So fractal price action is important so you can understand what's going on. It helps you. This may be information overload when you're trading, but it's good to know that if you want to short 13 on a smaller time frame, you're going to be shorting into a third leg, and the rules for third legs is they typically reverse. So if you shorted 13 and you're wondering why did the market reverse, well, you just saw in the 1 minute chart, you shorted the low of a trading range. Whether you acknowledge the trading range from yesterday or the bar 4 low, or you acknowledge that there's 3 legs down, there's a lot of supporting price action saying this is a trading range low. And that's not to say that the market can't collapse. We don't know until the next couple bars print. But if you're short here and you see 14, 15, and you're taking a loss, you're like, slamming your hand on the table. Why didn't it collapse? Well, trading range behavior, trading range lows, it's reversing. So now we have trap bears. We have gaps at resistance. That's good. Bar 20 is the first pullback after 3 bars, 17, 18, 19. First pullback, bar 20. First pullbacks get bought. They typically fail. Then we see that with bar 21. Bar 21 is another big pull bar closing on its high with follow through 23. Now we have more gaps open. When gaps stay open, that is trending behavior. And that doesn't mean an all-day trend. It just means one side, in this case the bull side, has more pressure than the bears. Gaps let us know when bears are trapped. Gaps let us know when traders are trapped. In this case, bears are trapped. Bar 25 rallies and sells off. Really bad close for the bulls because it closed in. Did I say 25? Excuse me. Bar 23 rallies and sells off. Really bad close because it closes below the 22 high. So bulls did not hold at new highs. Instead, they start to buy pullbacks. The pullback starts here. 23 high. 23 high, 24 low. This is the length of the pullback because this is where the short started. And this is where this rally started. 23 doesn't break a trend line. 25 doesn't break a trend line. 26 doesn't break a trend line. We don't get another trend line break till here. That trend line break. So for counting legs, leg 1, pullback, leg 2, pullback, leg 3. There's enough momentum for this leg to get its own second leg. Leg 1, pullback, leg 2, pullback, leg 3. Enough momentum for this to get a second leg. Pullback, leg 3. But look at this pullback here. 1, 2, 3, 4, 5. This is a 5-bar bear microchannel. It has legs lower. Bulls were buying each bear bar. So something's changing because prior to this, bears could not make money. Bears couldn't make money on 20. Bears can't make money on 25. Quick bears, brave bears made money on 28. And now they're getting a channel. So we know when the opposite side gets a channel, we're in a trading range, whether we know that trading range is coming. Look where this leg sold off to, right around here. I just want to place a quick trade on the right side because I'm looking for a second leg of this leg up. The market's rallying. Again, I just trade second legs. So I'll show you guys a trade. Here's a trade. I'm looking for leg 1 of 212, 213. Excuse me, I'm looking for leg 2 of 212, 213, 214. I want the market to pull back now to the right around the EMA and then get me out for 1R, which looks like right around there. So the high, so pull back, rally, and that's the second leg. Anyways, so market's rallying. We have 3 legs up. We have multiple 3 legs up. We have leg 1, pull back, leg 2, pull back, leg 3. We have no trend line breaks, so you could say this is an entire leg 1, pull back, leg 2, trend line break, pull back, leg 3, trend line break right around here. And now look, even this leg gets 3 legs, leg 1, pull back, leg 2, pull back, leg 3. Market's becoming climactic. We have a bear channel, 33, 34, 35, 36, 37. Bear bar closing out slow, strong to get second leg down. There's a pullback on the high of 34, sells off, pullback, sells off, pullback, sells off. 36 is a bad close. The market came close to the EMA and bulls bought that. So bears weren't even able to get to the EMA. So if you're looking to get short, think about that. The market sold off and rallied. There's more buyers than bears shorting lows. 37. It's not an inside bar, but it's very close to being an inside bar. I think if you're short, it's good to get out of shorts because now you've got multiple legs down. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. And I want you guys to just see that on the 1 minute real quick. There's your multiple legs down. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, pull back, leg 5. Rally. Leg 6, 183, creates a double bottom. Bears are trapped here. We're going to short higher. This gives them an opportunity to get out. They make money on the second entry and then get out break even on the first entry. So trapped bears are going to buy back shorts, and that's going to cause a rally because bulls are going to buy into support as well. So now we know there's a double bottom here. Trapped bears buy back shorts, and that causes enough juice for this next leg up. 37, bull bar closing on its high, followed through 38, bull bar closing on its high, 39, bull bar, but it's not closing far past bar 38, so be cautious. And we're in the third leg for sure. Leg 1, pull back, leg 2, pull back, leg 3. Bar 40, good bull bar closing on its high, bad follow through 41. 41 is the first reversal for these 3 bull bars. And you can see that bulls were more eager to buy this than bears were selling because bears weren't able to make 1R. So bulls that bought this made 1R, 41 very quickly. But now we have 44. Bear bar closing on its low with no tail. So we're starting to get climactic because multiple third legs, bull bars are closing on their high. They're looking good in the third leg. When we have nice looking bars late in the trend, that's a sign for climactic price action. 45, 46, 47. 3 bull bars in a row, but they don't get followed through. Instead, this becomes a third leg within a third leg. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. So it's a nested third leg, a nested wedge top here. 47 sells off in the rally. So there were buyers below 48 sells off in the rally. So there were buyers at the first trend line break for these 3 bars. But now they're in a losing position, 49. 49, big bear bar closing on slow. I would have liked to take this trade, but I missed it. Instead, I took a trade a little bit lower on NASDAQ, and it worked. First touch of the EMA is usually a good buy. We have more than 20 bars above the EMA. But the problem with today is that there's trapped bears down here. It started with a trading range. And we're already in a bear channel. So this is a leg in a trading range. Because this is a bear channel. So bear channels don't happen in bull trends. So this is when the trading range started. And this is the high of the trading range. And now we know it's the high once we see a low put in right around here. So 52, bear 52, bear bar closing on its low. Bad follow through 53. 54, I'm going to speed this up a little bit because we're at the 20-minute mark. 54, bear bar closing on slow. 55, bear bar closing on slow. Both these bear bars have tails, so they're not strong bear bars, but they are closing past its midpoint. 56, bad follow through. We still don't have a trend line break, so there's a channel down right here. 57, bear bar closing on slow, but now it has a tail. So bulls are stepping up, and then we have a nice looking bear bar, 58. 58's testing. Where are they testing? Well, where the bear channel ended. See? So that's a hint. This was a hint that the trend is ending soon. Then we have a rally. We're in a trading range, so we get a deep pullback, 59, 60, 61, testing the breakout point, and that sells off for its own 3 legs. Leg 1, pullback leg 2, pullback leg 3. If you're looking for a continuation of this, this is a bull leg in a trading range, which is nothing more than a pullback. Trading ranges get deep pullbacks. It vacuumed up to resistance right around here, and there were more sellers sitting below 52 than buyers willing to buy the EMA. And it gets its own 3 legs down. Leg 1, pullback, 2, pullback, leg 3. 71, good bear bar closing on slow. Bears that shorted this made 1R very quickly, and then they got out. Bad close right around their swing low. And then we see 73. 73 is a bull bar closing on slow. 74 is a bear bar closing on its low. So it's trading range behavior. Lots of overlap. I think past bar like 70, 72, it's good to just wait till tomorrow to trade. Market can become sporadic towards the end of the day. Just like it's advised to wait the first 30 minutes, wait out the first 30 minutes in the open. Usually you can miss the last 30 minutes. Go over a couple measured moves real quick. This is one move we talked about in the Discord call today. We talked about what's the target, you know? First target's gonna be gap close, past that's gonna be 1R, past that's gonna be 2R. 2R was never met. 1.5R was. That is one way to do measure moves. I kind of just go for 1-to-1s, but we're going to do 3 bar pullback, right? 3 bars. So here's 3 bars. Put it to the pullback, the 21. And look, that's met. And then 23, you can see that bulls are taking profit 1-to-1 of 17, 18, 19. Here's another 1-to-1. It was met, obviously, because it's to the right. But with this type of price action, I would probably just measure like that. If it's real time, you know, put it right around here, put it here. To be consistent, we put it below the 24, and that 1-to-1's met quick. 26, 27, pull back, and now I'll start to be cautious because we're in that 3rd leg. I don't know if I would trade this. This is also a trading range here. Bulls trying to get the breakout 1-to-1, and it fails. Here's a bear spike starting on 47 down to the 50 low. Put it at the top of the pullback. I put it at the top of the pullback, but I know most of us would either short here or here, but that is where the spike started, so it's a leg, so that's where we're going to measure. If you wanted to measure the breakout, you could do something like 55, 54. That's conservative, but and 1-to-1 was 1-to-1 actually met. It was barely met. It missed it by a tick on 56 to 59. And then 3 bars here. Put it at the bottom of the pullback, and it fails. You get stopped out. So this was a better fade. It's a hard fade because of the context and where it's going. But it did work. Maybe you see 68 and you short that and you go for 1-to-1 there. And then you'd sit through a pretty deep pullback, almost get stopped out. But you would make that. I like 70 for just a market order short. I wouldn't take it, but I do like it. The problem is it's late in the day, so this is not the best trade. But you short this, you make 1-to-1 very quickly. Some of the trades I took, I'll show you guys the trades I took today. I take them on NASDAQ because sometimes I trade multiple contracts and it's just cheaper commissions. So I took a loss right in the morning. I was looking for a quick scalp of the overnight session. Okay, that's a loser. I took this trade. So here, bang, get filled on 10, and then I'm out on 12. I manually hit out, but it did hit my target. And then I couldn't get in. I was locked out for a couple hours. The next trade I took, I took this trade, one contract, and I got stopped out because I thought this lined up with the EMA nicely, and we traded above the EMA for the rest of the day. I got stopped out there with one contract, and then I saw this as a breakout point right here, and that was I took a little bit bigger position, 2 contracts, not that big, filled there. When I saw 61 fill me, I quickly threw an order up for 1-to-1 right here, and that was a bear leg I caught. I got filled right away, 62, exited. Then I saw this 1, 2, 3, 4, 5 bear bars in a row. I was like, I want a second leg of this. So I went for this trade right here. 63. Got filled on 67, exited on 69, and that was me for the day. So just a few trades, but I was profitable, up about 250 today. Pretty cool day. I hope you guys are doing good. Hope you guys learned something. If you learned something and you need some more clarification on anything, please don't hesitate to ask me any questions. If you learned something, share the show. Don't be a hoe. I will talk to you guys tomorrow. Thank you for your support. Bye.